Hey guys, this is Tanner Invest here. Thanks so much for watching. It is pretty late. I was actually doing some stock research tonight and just wanted to get this video recorded prior to going to sleep. So excuse if I'm looking a little tired right now. But today I looked into a stock and it passed the sniff test, just like Ryan, in the comments on X mentioned to my X post tonight. This company passes the sniff test like no other. And also, I just want to get into what this company is. So, Zeta Global. We've probably seen this around if you're following the X community. Ticker symbol ZETA, Zeta. They are growing like freaking crazy. And I was looking into their investor relations. I think this stock, this is not financial advice. I think it's silly that I have to say this over and over, but of course, do your own due diligence, just like I did tonight, where I feel like tomorrow I really want to jump in on the stock. Obviously, with only a couple days looking into this stock, there's still a lot more I need to learn. But I feel like I got a general understanding of what the company does. I have a general understanding of their growth and the trajectory. So let's go ahead and get into the stock Zeta Global here. So as we know, Zeta, let's go ahead and look at the 1-year chart, down 21% in the past year. Year to date, we are down 21% as well. And in 5 years, we have been up 60.27% with this massive run up in 2024. As you guys remember, marketing technology, MarTech companies have been skyrocketing in 2024. AppLovin was the #1 gainer last year. And we can see on their chart what happened in 2024. So they were trading, in January, they were at, $40 a share, say, and by the end of the year, they were at 340. So massive gain. 2024. Trade Desk as well was a big winner in 2024 as well, where they started in about $50 and ended the year more around 130, 140. So a lot of these companies ran last year. And Zeta, what makes it a little bit different is they they haven't actually recovered like Trade Desk and AppLovin have. So as we see here, they are down 21% year over year. A lot of this came because this drop off here in November was due to a short report. And I'm actually going to get into a video of the CEO kind of defending the short report and what that is. And we all know, guys, short reports, you can't always pay too much attention to them for obvious reasons. There are people out there that want the stock to go up. There are people that want it to go down. And so sometimes there can be some short reports that aren't 100% true. And so let's go ahead and jump into the investor relations page. This is what I started with today that just really caught my eye, guys. So this is the Q1 earnings presentation. This company is growing like crazy. This is just the overview of the Q1 results. We got 36% year-over-year revenue growth, 53% adjusted EBITDA growth as well. That's pictured here. Then we have one thing that's crazy to me is the amount of accelerated scaled customers. So what they define as a scaled customer, as you see down here in the blue, the dark blue is any customer that's spending annually 100,000 to $1 million. And then anyone who's spending over $1 million is this light blue color. So they're growing in both areas where the amount of scaled customers have grown at 19% year over year. And then what happens here is not only are they scaling their customers, but those customers are also growing their ARPU. So each customer, which actually shows on this slide, a scaled customer within 1 year on their platform spends this amount, and then the 91 million from those customers, while customers with 1 to 3 years and 3+ years spend significantly more money with their platform, which is great. Once you get into their ecosystem, they're spending more money. So we can project out future earnings a little bit better because you're seeing growth within their scaled customers. So that's fantastic. One thing here, they're super well diversified. So as you see in this pie chart, they are in almost every type of industry, and it's very diversified. Consumer and retail obviously taking up the largest chunk at only 22%. So that's insane. Now, they're also serving 44% of the Fortune 100 companies. So, ton of retail. They got the airliners, insurance, telecommunication, financial services, pharma, automotive, tech and media, and agency. This is insane, guys. So we can see here they are they project out 3 years, and they have a slide later that is incredible because it shows what they were projecting 3 years ago back in 2022, and then they show what the results were in 2025 and against their expectations. And their targets now are 3 years from now, which is 2028. And this is the slide. So right here in February 2022, they projected their key metrics, which is revenue CAGR, adjusted EBITDA CAGR, and free cash flow CAGR. They were 22%, 33%, and 58% respectively, and they were able to triple beat on these three key metrics at 30, 45, and 74. They didn't only beat; I mean, they demolished those earnings those key metrics. Now, the 2028 model over here, you can kind of tell either A, they're projecting a little bit slower growth, or B, they're sandbagging, which we know how companies work. They like to sandbag. So I'm expecting kind of a similar story. As an investor, I would like to beat the 2028 model just as much or more than we beat this model here. Now, let's go a little bit further. I mean, that's the majority of the slide show that I kind of wanted to show you guys. One thing too to note, their stock-based comp is not only declining as a percentage of revenue, but it's also declining as an expense as well. So that's fantastic. That's something you want to see. And so they're not just giving away stock like it's candy at this phase, even though they're still not profitable at this moment. This is something great to see. They're actually getting very close to profitability. So here is, this kind of just shows more about what their platform does. If you guys want to look into this, I suggest just going to their website. I don't want to make this video too long. That was kind of what I wanted to share. Next, what I want to share is what happened on this drop down in November 8th, down to, as you see here, the stock just went absolutely crazy down. It's because of a short report that came out. And so I have this CNBC video that I want to show, and I'm going to mute my mic before I do this because I don't want it to play twice. Seconds. All right.
Before we get into the data, I got to ask a question about the company and the stock. The stock was hit on a short seller report earlier this month. One of the claims raised in that report is that Zeta has what are called consent farms, websites that are getting people to hand over more data than they intend. Are you involved in consent farms at all? Would you frame it differently, what these practices are? What should investors know about that?
Let me start by saying that the report that published was so erroneous and so filled with misstatements, it didn't even get our audit firm correctly. Now, John, to put in perspective, we publish our audit firm on almost every document we put out there. I had to ask somebody what a consent farm was in order to respond initially. No, we never do consent farms. Our organization is one of the most powerful as it relates to our data. We have spent hundreds of millions of dollars over the years in acquiring companies that create first-party opted-in data where we partner with the consumer. The consumer's always getting a value exchange, whether they're getting a newsletter or able to comment on a site or share different content to their social graph. A consent farm is when somebody is running misleading ads to get somebody to sign up for something that they have no intention of giving them.
Okay.
All right. So that kind of cleared it up for me. I mean, if the short report doesn't even have the correct accounting firm, it's like as if you were getting a claim from your insurance company and they have your wrong address, or it's absurd to me. So a couple other things I wanted to go over is right now, obviously their EV to EBITDA ratio extremely high. I mean, these guys aren't even profitable at the moment, so obviously that's going to be a little out of whack. But what I noticed here is their PEG ratio at a 0.75, their forward PE at a 22.42. I mean, their market cap right now, guys, is only 3.3 billion. And this is a company that, to me, looks like they will be pretty easy growth year over year. I mean, just based off their track record and their guidance for 2028. So it's really attractive to me. Another thing to note is that they're on stock. Shout out to Stock Analysis. I love them for analyst ratings. Let me go back. Okay, look at this, guys. I mean, this is what I like to see. where they have a total of 11, 13, 14 analysts, and 8 are strong buys, 3 are buys, 2 are holds, and 0 are sales. Sells or strong sells, obviously. And when we go into the actual ratings, let's see, we have a lot of people adjusted their, in May. They're adjusting based off what happened in April, the tariffs. So I wouldn't take much in consideration as to these declines, but look where the stock price is today and look where these analyst ratings are. These are all strong buys: 20, 16, 25, 26, 25, 30, 29, 15, 34, 25, 27, 8. I mean, come on. This is insane, guys. The average price target is $28.57 with a 102% upside. I mean, that's something that I like to look into. And so one thing I like to look into as well is who are the founders. So the 2 founders is the guy, David Steinberg, which you just saw. He's actually had a couple of successful IPOs and exits in the past. He did have one company go bankrupt, but hey, you didn't hear that from me. So the other thing is the other owner is Scully. This guy, John Scully, who actually was John Scully, the CEO of Apple in the past, okay? So John Scully recently retired and is no longer on the board because he's pretty old at this point, not gonna lie. But he actually was the CEO of both Apple and Pepsi. So not bad, not a bad track record. And so this guy, knows business. It tells me, this company was founded by people that were serious about making this thing for real. So I feel like the bones of this company are just where you want them to be. So that's it for me tonight, guys. I really didn't want to make this video too long. I'm still going to do more due diligence myself, and I expect you guys to do the same. Please, I got someone on Twitter the other day telling me, thanks for the advice. You just made a bunch of people lose all their money. And I'm like, I made one video on this. It was on Bitmine, and I was like, I said I'm not going to be buying it, and that it's overvalued. Like, people just are stupid out there. So do not just follow my advice blindly. I'd take a look into it. I just personally think that the short report was a little bullshit, and I do think that in the long run, this company has legs because of its great performance, guys. And so I will be actually purchasing shares myself. I'm super transparent on my buys, so I will be trying to add to this position. I'm trying to figure out what to trim right now. UNH earnings are coming up, so if UNH doesn't absolutely obliterate earnings, I do think I will be trimming them. Also, there's laggards in my portfolio like PayPal that have been hanging on for for a long time. I don't want to trim PayPal because I still believe it's insanely undervalued, but is it the right time to own PayPal? I don't know. But I will be, getting into Zeta because I don't have any marketing technology companies currently in my portfolio. I've always been interested in AppLovin, which you can see like what's happened here, and then I have been interested in Trade Desk, who literally today just got included in the S&P. So I think my play is going to be Zeta because I feel like just at this valuation, it makes a lot of sense. The company clearly is growing. Their customers like their platform, and it's led by founders that have had previous success. So that's it for me, guys. I'm going to get out of here. Thanks so much for watching. Please follow me on X and give this a like, and if you want, subscribe to the channel. Thank you, guys.